Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, first day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, point any internet connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just want to have access to the chat box. We do stream live during this broadcast on our YouTube channel, which is youtube.com/CFRN. So anytime that you miss the live broadcast, you can always go to the YouTube channel. We archive each and every daily show there. In fact, we have over 1,600 daily shows archived at youtube.com/CFRN. If you happen to be listening to this broadcast after the fact as a podcast, maybe on iTunes or Spotify or iHeartRadio, wherever pods are cast, if you would like to see the charts that we're talking about, you can hit pause on your podcast player, go to youtube.com/CFRN, hit the subscribe button, of course, and then find the corresponding date of the podcast you were just listening to. Click, and you'll have the benefit of both the audio and the video of today's broadcast. We've been broadcasting live every trading day since 2005. It was in 2011 that we added the video portion and started archiving everything on our YouTube channel. So, thanks, YouTube. Okay, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. Thank you for enabling us to gather here today for this broadcast. We pray that we would have meaningful discussions that will help us to edify and build each other up and also glorify your name. Help us to share things that will benefit all of us and draw people to your kingdom. Help us to deal with different challenges that we are facing individually and as a team. May we approach each other with respect and kindness. And God, we pray that you would create an environment of cooperation in this place. Help us to be of one mind, one accord, and one spirit, your spirit. It is in Jesus' name we believe and pray. Amen. Okay, my friends, happy Monday. Now, Sound check here. Somebody tell me that's listening via YouTube. I switched out microphones. We've been just beset with audio problems here of late. In the live training room every day, the microphone's fine. Everybody hears me. But then when we start streaming across YouTube, for some reason my audio drops, but the guest has loud audio. And so I've tried all sorts of changes, configurations, cables, microphones, hoping we finally got it right. So I'll wait for, well, I'll keep going, but somebody that's listening via YouTube, let me know. If the volume is the same, any different, too low, too high, you tell me. Okay, all right, these are the cash markets, the indices from around the world, starting in the US. The Dow's up 668 points. That's a little over 2%, and I believe it's the best day so far of 2021, the way they calculate such things. NASDAQ is up 342 points. That's 2.5%. S&P 500 is up 90 points. That's over 2.25%. And we only have one more weekly trading zone above us on the S&P. Now, based on history, going back to December 14th, 2009, which is the first time we publicly published the weekly trading zones, anytime price hits the highest or lowest weekly trading zone by a Tuesday morning, it's usually an indication that a major reversal is about to unfold. Of course, past performance is no indication of future results, but it's all we got. So we'll be watching very closely to see if, in fact, price does tag that highest weekly zone by tomorrow morning, anytime tomorrow morning, up through the time this broadcast starts. If we reach that highest zone, we will be preparing ourselves for a major reversal to unfold. However, we won't take any action until it actually starts to unfold. We trade what's in front of us. We always ask the market to prove itself before we take action. In the commodity basket today, crude oil down a penny, trading 61.49 last. Gold up $2.30, trading 17.3110 last. Silver up 49 cents, trading 26.93 last. That's a gain of almost 2%. Now, with silver up 49 cents, let's call it half a dollar. When the price of silver moves by $1, let's say it goes from $26 to 27, or 27 back to 26. A $1 move in silver, if you hold a large futures contract, that's worth $5,000. Okay, and that pendulum swings both ways. Silver is very volatile, margins are high. Be careful. So for futures traders, this move in silver so far today, it just ticked exactly up 50 cents. That's a $2,500 per contract move if you're trading silver. In the Asian markets at the close, Nikkei posted a gain of 697 points, 2.5%. Shanghai rose 42, 1.25%. And the Hang Seng added 472 points. That's a gain of a little over 1.5%. In the European markets at the close, FTSE gained 105, 1.5%. The DAX added 226, 1.5%. And the CAC added 89, a 1.5% move. That gives us a green day in Asia. It's a green day in the UK. And so far, it is a really big Radio Monday here in the US of A. So with that, if you're ready, Michael, you can take the charts, and Michael will give us a recap of everything that happened this morning in the live training room. After that, I'll come back and we'll go over the Concierge Trade Alerts, the Logic 247 alerts. As you know, we open for business, not Monday morning at 9:30 a.m. Eastern, like most of the world, or most of the folks here in the US. We actually open for business Sunday night at 6 p.m. Eastern, because that's when the global markets open. And so far this week, since last night, Sunday night, 6 p.m. Eastern, we're in week 135 of Logic 247. We've issued a total of 18 alerts, still waiting on the results of 5. We've had 13 actionable alerts, which 2 were stopped out. That's 15% of actionable alerts. We've averaged over the last 134 weeks, 20% do get stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure, and a very simple 3-step process that we teach all of our traders. Now, if Michael's not quite ready, I'll go ahead and bring up a daily chart of the S&P. Right here. Okay, big goings on. All right. This is the all-time historic closing high in the S&P, President's Day, a day when Wall Street was closed. Following day, we put in a higher high and a lower low. But the closing high, this is the all-time historic closing high. This is the all-time historic intraday high. A bearish engulfing candle, because the high of this candle is higher than the previous day and the low of this day is lower than the previous day. So you may have heard it called an outside day or bearish engulfing. In the proper context, that tells you to be prepared for a potential substantial retracement. And that's what we got. When price pulls back to the BBC, that's the green line, we expect that to be good support, and it was. We closed above it that day, even though we spiked all the way down to the 50% fib of the last leg up. Buyers came in at that 50% fib, right on cue, drove us up to close just above the BBC. And then when the following session opened, we dipped back below the BBC, but buyers came in, took us all the way up to red and falling. At red and falling, we expect that to be good resistance until proven otherwise, and it was. When we opened the following session, buyers tried to keep pushing us higher. They just weren't quite committed enough. Sellers came in, took us all the way back down to the step line, to the BBC, to the 38% fib extension, back down to the 50%, I'm sorry, 38% fib retracement, and then back down to the 50% fib retracement. So 1, 2, 3 days we spent at the 50% Fibonacci retracement. And then over the weekend, I published a chart, and let me see if I can drag that up real quick. And Michael, if you happen to be around, we're ready for you to pop in whenever you're ready. Let me just jump over here and I'll find that chart. I think I posted it Friday night, as I recall. Yeah, here we go. Here we go. So I published this ES daily chart over the weekend. We had 2 windows of opportunity. The window above was filled. And so when we closed Friday, okay, I'll scroll on up to the original chart that I posted. Yeah, here we go. When Globex opened Sunday night, we have 2 daily ES windows of opportunity, one above and one below. Should offer some great trading opportunities. And it did. So what happened is we opened last night right here at the bottom of the screen candle. We dipped just a little bit. That's the wick you see. But then buyers came in and took us now on, you see that candle, that's that candle, Friday. The window of opportunity is right here between the 50 and the 38% Fibonacci retracement. And so buyers came in, they drove us right up through that window of opportunity, filled it, kept going, got us through the step line, the BBC, red and falling. Now we're sitting at the 38% Fibonacci price extension. This is the 38% retracement of the last leg up. This is the 38% Fibonacci extension. Oh, I posted a message this morning in the discussion group that we should expect this to be good resistance until proven otherwise. And price is pressing higher. The high so far, 38.99.5. And it looks like that 38% is roughly 3,900. So we're practically there. If we can take out this swing high, then we have a window of opportunity. Again, this is on the daily chart. If we can get above this 38% Fibonacci price extension, then we have a window of opportunity from here up to here. And if we can take out the swing high that was put in on February 25th at 39.3450, then we can make a run at the all-time historic high put in on February 16th at 39.59 1/4. Okay, I haven't heard from Michael. He must be running a little bit late. Valerie, did Michael mention to you if he would be late or unable to join us today?
I'm here.
Oh, you are?
I'm here.
Oh, okay.
I'm here.
All right.
Hang on a sec. I gotta do one quick thing right here. And
I had called for you earlier. You probably just hadn't got back yet.
okay, here I am.
Yeah, no worries. We've already covered the daily chart, guys, so when I come back, we won't have to go through all that again. We'll just dive right into the 30-minute chart.
Excellent. All right. Let me
Go.
bring. Okay. Here it is.
I got you locked and loaded.
Great. All right. I'll jump right into it then. Here we go, guys. Before we do that, let's do one more thing over here. Okay. Here we go. Good afternoon, everyone. Today is Monday, the first day of March 2021. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Scroll down right here to where it says free 5-day trial, no credit card required. Click on that and you'll be brought to this page, EminiTrainingschool.com. On this page, all we ask for is your name, your email, your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, well, we can't send you all the information you need for the free trial because we don't know that you took it. Okay, so make sure you click that link. All right, back here to the spreadsheet. Now we did something a little different today. Let me just delete this line. We did something a little different today, and I'll get into that in a minute. But anyway, we still want to get our goal for the day. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the first day of March 2021. Today we made 35 ticks in crude, 55 in gold, and 55 on the ES. That put us up $1,587 per contract in the morning session. Today it took 10 minutes and 2 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 20 trades this morning. On the month now, we're up $1,587. That's over one trading day, averaging $1,587 per contract. It's now been 14 consecutive days of getting my goal, and 38 out of 39 possible days so far this year, we got the goal. So on the year now, we're at $32,072. That's over 39 trading days, averaging $848 per contract per 2-hour trading day. Okay, now we'll get into what we did and didn't do. I don't know where to start today. Well, I guess we'll just start with gold. Okay. Now, the thing that I did different, you can see all these vertical and horizontal lines in here. The thing that I did different today is I found myself when I was doing one-on-one training, a lot of times saying that, I mentioned that, a little while ago, or even in the morning session, it's got to that area that I said I thought it was going to get to, or it's got to that area that I thought it was going to get to. So now when I think it, I'm putting a vertical line and I put a horizontal line where I think it's going to go to. So you see when I thought it and said it, and where I thought it was going to go to. And if I think, if I change my mind, or if I have a pullback area or anything like that, then I also put that in, the time and when I said it. And these little lines, they begin where I actually thought it. That's what I was trying to do different this morning. Now, it was pretty time consuming for me to do all that, but I mean, we still worked everything out. So once we got started this morning, we had a nice long trade right here. We had this mess right here, but it really wasn't given a trade opportunity in here. Now, I can say anything that I want, but you got to have the trade set up. The charts have to agree. Okay, so we had a nice long opportunity in here and another one there that I missed both of. And then we had a shorting opportunity over here. This was our first trade on gold, and we picked up 7 ticks on that one. See right in here, I thought it was going to get down to here. I thought I had a pullback area up here. Charts were saying it was going to go down, so it went down. It did go to where I thought it was going to go. And then right here, I thought it was going to go further, and I put that area down here, and it went down there. Now, I didn't get into that one, and there was another shorting opportunity right in here. And on this one, I thought I had a pullback area up here, and it doesn't look like I really had a target area on that one, unless that was this line right here. This could have been the target area on that one. Anyway, so it dropped down, and over here we had another shorting opportunity that I got to break even on. The next one after that, I think it was a break even. Yeah, the next one after that, I picked up, it looks like I picked up 10 ticks. I think this is where I actually picked up 10. No, this is where I picked up something else. I was plus 17, and then I ended up at plus 24. So I picked up 7 ticks here, and the next one in here, I picked up 13 ticks there. Had a break even in there, and see, it did end up going to where I thought it was going to go. So did this one, and so did this one, and this one, and this one, and this one. On this one here, I think we went from, we were at plus 37, then we went to plus 42. This looks like more than that. This must be when we went from 42 to 53. So I think we picked up 11 here, and then just a couple there to get us to plus 55. We had a break even. It looks like I missed a couple in here that I didn't record. We had something there where we picked up just a couple, and a break even right there, and something there where we picked up, looks like about 10. And then we get into the break. Now, during the break, let's see, there was a shorting opportunity there, there, and there, and a long opportunity right there, and there, and shorting opportunity there, and there, and there. And that was gold this morning. And so it was a pretty active market. It was pretty easy to trade. It was doing everything that, in most cases, everything I thought it was going to do when I thought it was going to do it. And this is crude oil. We did the same thing with crude this morning. We started out in here. This is where I thought it was going to go down to. And then it finally gave a trade setup, and it did go down. This is where I thought it was going to go down to. This was my pullback area. Didn't pull back very far on that move. It did go down and give us a little bit. The first crude trade we made 5 ticks on. Then it pulled all the way back up here to that area, and then it turned around in here, and then I wasn't watching crude as much, and it gave a nice long trade right there and came down. And let's see, in this leg up, did it give any more? I don't think that it did. Okay, so then it pulled back, and right in here I was given this as a target area because we were bullish, so I was given this in a target as a target area, and it did eventually hit that, but it didn't hit it until over here. Now I gave that as a target area right here, but with the cycle going down so steep, we didn't end up with a trade set up. Okay, so it turned around and started going in the other direction. And then I was given these levels down here as target areas. Okay, and so on the next trade on crude, we picked up 8 ticks. It put us at plus 13. The one after that, we picked up 4 to put us at plus 17. Then it turned around and it started going in the other direction, and we had a nice long opportunity here. And I said, this was a good target area for that. And that gave us, from 17, we went up to 23. Then right here, we went up to 24. Then somewhere in here, we had a 1 tick trade. And then we picked up 10 ticks here to go from 25 to 35. And that was a break-even trade in there. And in here, I was just saying this is, given that this was the direction of the charts, this would have been the pullback area, and this would have been the go-to area. Now, I said that at this time right here. This is the pullback area, and this is a good target area, but the charts had to agree, and they didn't. That's why, if you see lines like this, the charts don't agree with the trades. Okay, the charts don't agree with what I'm saying anyway. And so anyway, we had a break-even trade there, and that was it. Then we went into the break. And during the break, there was a shorting opportunity here. And that was pretty much it. There wasn't that much during the break. Okay, now the ES gave us some pretty good stuff this morning. And I did do the same thing with the ES, as you can see. Let me scroll back a little bit further. Now again, those of you guys who were in here who were either not partners, not members, not passport holders, or not active people, so you're not able to get in there and see this all live. You gotta pull whatever switch it is, or flip whatever switch it is, or whatever it is you gotta do to be able to get in there to see it all happen in real time. Okay, so this was our first trade on the ES. Right here, we picked up 7 ticks. This was my target area. I had this as a target area on the long side. And you can see it took a while for it to get there, but it eventually did. And it gave a long opportunity here. And I had that as my target area on that. And I think we went from plus 7 to plus 31 on this. So we got 6 points on that, or 24 ticks. And we had another big trade right here. We went from 31 to 47. So there were 4 points in there. And this was our entry point. This was our target area, but I saw it was looking to go further than that. Then we got in here, and I didn't end up doing anything in here. But this was the target area. This was the pullback area. Okay, and then we had another target area, but we didn't have any trades set up here for it. And then it got really choppy all through here. So we didn't do anything in there. So on the ES at this point, I think we're at plus 55, I think, right? And we went from 47 to 55, so that might be this trade right here. Went from 47 to 55, picked up 8 ticks. And let's see, there was a bounce off the BBC, well, trendline trade right in there. A trendline trade there, and we get into the break, and there really wasn't all that much in the break because the slingshot was not giving it up. Okay, the cycle was just kind of flopping around right in the middle there. I'm not giving you any trade setups during the break. But if we go all the way back here to the spreadsheet, in the spreadsheet, again, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today's the first day of March 2021. Made 35 ticks in crude, 55 in gold, and 55 on the ES. Put us at plus $1,587 on the morning session. Today it took 10 minutes and 2 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 20 trades this morning. So on the month now, we're at $1,587 over a 1 day, averaging $1,587 per contract per day. We've made the goal 38 out of 39 days so far this year, and Our total on the year is $33,072. That's over 39 trading days, averaging $848 per contract per 2-hour trading day. If you have not taken a free trial with us and you want to, go to the homepage at CFRN.net. And right here it says free 5-day trial, no credit card required. Click on that and it's going to bring you here to EminiTradingSchool.com. On EminiTradingSchool.com, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading channel so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial. All right? All right. And that was our morning session. Okay, with that, we can pass it back out to fabulous Phoenix, Arizona. It's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. And for some reason, it appears that today your audio did not come through
On YouTube? Huh.
Oh boy.
Huh.
Oh boy. And everything is, let me take a look here. So settings one more time. The audio. Okay. Yep, everything is as it should be. So I guess this will be one of those days where we have to ask Valerie to upload her recording. Thank goodness that she does a recording. But that's the first time that your audio didn't come through. The video part is functioning. All of a sudden, your voice just came in.
On EminiTradingSchool.com, all we ask for is your name, your email.
All right. Dear Lord, we pray right now over this broadcast and over this audio. I think I figured out what was wrong with your audio, but Valerie, if you would be so kind when we finish, it won't be a long show today. If you'll render it and upload it to YouTube, I'll delete the bad one and then hopefully we'll get it up. My question now, of course, would be, is my audio
And your phone number. You can tell us the biggest trading channel so we can tailor one-on-one training. Just
trying to scoot over.
your audio is fine right now. Yeah, your audio is fine right now.
Test 1, 2, 3. I must have 2 instances of it running somewhere. All right. Well, I won't let that distract me. Recap of the recap.
Today it took 10 minutes, 2 trades, $120 a contract.
That's a good job,
Thank you.
as always. Okie doke. All right, guys. We already looked at the daily chart for the S&P, and if you happen to miss that first part, right overhead, we've got the 38% Fibonacci price extension. Now, I'm gonna do something here real quick. I'm gonna delete that and that and that. Get rid of these, even these. I don't even think we need that anymore. Okay, so from the swing low that was put in on October 30th, I'm gonna draw fibs using the retracement tool up to the all-time historic intraday high. Okay, fibs are in the area, so don't worry about getting exactly to the tick. Like here, the high was 39.59 1/4. I could diddle with this and try to get it to exactly 39.59 and a quarter. Wow, look at that. And then the low over here is 32.16 and a quarter. Let's see if we can do the same. 32.16. Looks like we're going to just leave it at 32.17 and a quarter, where it seems to want to go. Again, fibs are an area. So we came, after we put in the all-time historic high, intraday. The closing high was on President's Day when Wall Street was closed. And that's kind of a big statement. The all-time historic closing high in the S&P 500 E-mini Futures was put in on a day Wall Street was closed. Following day, we put in a new all-time intraday high, but we closed well below the previous day. That gave us a bearish engulfing candle. Resistance always sends price back to look for support. Pull back to the BBC holds more often than it doesn't. We expect it to hold. It did hold, even though we spiked all the way down to here. Buyers ran us back up above the BBC by the close. And then the next day was bullish, took us to red and falling, which we expect to be good resistance, and it was. And that resistance took us all the way down to the 24% Fibonacci retracement of the entire move up. Okay, so this is the entire move. Now, the other tool that I use is the Fibonacci price extension tool. And so again, we'll do our best to connect to the low. And we're going to take it to this swing high, which at one time was the all-time historic high. And then we're going to grab this. We're going to pull it up to the retracement low right there. And what that does is that extends out into the future using the same 14th century math, golden ratio, just as it helps us determine where price may find support on a retracement like it did here. We can project into the future where the market may find resistance. And we're coming up against such an area right here, the 38% Fibonacci price extension. If we can get above that, then we have a little window of opportunity up to the swing high put in on February 25th. And after that, we've got this swing high, which is 39.36. And then there's really nothing in the way of us making it up to that all-time intraday high at 39.59 and a quarter. Now, we did the fib retracements of the entire leg up from that low to that high, okay? And the shallowest fib retracement, 24, we hit it and we bounced from 37.84 all the way up to where we are right now. Today's high, 38.99 and a half. That's a big bounce. And we got resistance right overhead. We also have what's called just the last leg up. So we had a deep retracement that got us below the BBC. The market found support right at this swing low, 36.52 and a half, put it on January the 4th. That was a day that we spiked below the BBC, but again, buyers drove it up, going into the close. And you can see these pullbacks to the BBC. Even on the days we spike it, it holds, it holds, it holds more often than it doesn't. But periodically, it's going to not hold. That way we can have a deeper retracement. And that keeps the markets healthy. For a bull market to keep being bullish, there has to be retracements along the way. So now let's do fib retracements of just this last leg up. So we take our retracement tool and we put it right there and we draw it right up to that all-time historic intraday high. And so now we have a 24% fib retracement here, a 38% fib retracement here. and a 50% fib retracement right there. Let me open this up a little bit so you can see it better. So from this low to this high, there's the 24% fib, which you can see we bounced off that a few days. And then we flew through the 38, found support at the 50% Fibonacci price extension of the last leg up. And that sent us back up to red and falling. We've now come back down to challenge that we're sitting right on top of that 50% fib retracement of the last leg up. And we reached down and touched the 24% fib retracement of the entire move. So we know where support is. We know where potential resistance is here, here, right there. You know, this high is 36. This high is 34.5. So it's an area, there's a difference of 1.5 points between those two. So if we can get through those two areas, then that gives us another window of opportunity right up here. Now we don't trade off the daily chart. We just go to the daily chart to give us a high altitude, high level look at the entire playing field so that we can identify where the major areas of support and resistance are. So based on today, this 50% fib retracement, if that were to get taken out, then the next major support would be at the 24% fib of the entire leg up, this swing low. So resistance, potential resistance there and there, potential support there and there, potential resistance there, there, and there. And so with that information and our weekly trading zones, we're now able to go to the 30-minute chart. And on my 30-minute chart, you'll see I'm still running last week's weekly trading zones. I have this week's on my notepad right next to me. And based upon how the market behaves today and tomorrow, I will shift the old zones that remain important from last week. And it's last week's zones that we use on Sunday night because the zones get published Monday morning at 6:15 a.m. Eastern. So as the new zones take hold, I'll put those in, and the old zones that remain important, I'll make those yellow. So right now we're looking at last week's zones. 38.92 is a this week zone. And we only have, as I mentioned earlier, we only have one more weekly trading zone from this week overhead. And it's up at 4,005. So it's quite a ways. But if we somehow should cover this much distance and get to that number before the live training room ends tomorrow, that would be an indication to us that a potential massive reversal is about to unfold. Now, that's based on history. It's based on how price has behaved at the zones going back to December 14th of 2009. That's the first day we publicly published the zones. And on the few occasions where that has happened, we reach the highest zone or the lowest zone by Tuesday morning. I would say if it's happened 10 times, 8 times out of the 10, it has led to a major reversal, which means by the end of the week, we could go from the highest weekly zone all the way to the lowest weekly zone. And the distance from the lowest zone to the highest zone this week is about 350 points, which is equivalent to 3,500 Dow points. So if by tomorrow or Wednesday or Thursday, the guys on your favorite financial TV show are talking about the sky is falling, don't worry. It's just a deep retracement. The indices are built to go higher over time. The S&P, as an example, is 500 large cap companies. There's a lengthy list of requirements. It's not just market capitalization, but a number of things that the board over at Standard & Poor's looks at to see who's in and who's not in. And if one of the 500 companies starts to get unhealthy, they miss their numbers, they have some other kind of problems, then they are removed from the index, and a fresh, healthy company, a bullish company that not only met their numbers, but beat their numbers during earnings seasons, that kind of thing, they will replace the company that was taken out. So there's always 500 companies, 500 best of breed. So what that means is over time, yes, there'll be retracements and deep retracements and many crashes and all that kind of stuff. But over time, the indices will always go higher because that's how they're built. They're built to go higher over time. S&P, Dow, Russell, NQ. The Dow's 30 blue chip stocks. The Russell 2000 is 2,000 small cap stocks. The NQ, you get the idea, it's 100 tech stocks. Okay, now, not every company in the NQ is a quote unquote tech stock these days, but for the most part, that's what we think of when we think of the NQ. Okay, so we already went over this. We are in week 135 of Logic 247, 18 total alerts, still waiting on 5. I'll show you why we're waiting on 5. 13 actionable, 2 stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a simple 3-step process we teach all of our traders. In the live training room, for the simplicity of training, we use an 8-tick hard stop on everything, on every trade. What Michael is teaching you is the setup, the underlying principles, and he's teaching you that you must always have a hard physical stop in place. If you don't have a hard stop, you're not trading, you're gambling, okay? So it's important to learn, you must always have a hard stop. And the method that he teaches you in the room, that is a standalone methodology. You can learn that, trade that, you never have to do anything else. If you decide that you want to trade the alerts, then we use market structure to determine where the stop loss needs to be. The alerts are windows of opportunity. And so the purpose of the alerts is to point out those windows of opportunity to you as they unfold in real time so that you can go to your computer, go to your charts, and see the window of opportunity yourself before it triggers. And then when you're just starting, you trade that in your simulator or demo account so that you can practice everything you learn in the room each and every day. Now, all of our traders get what's called the 2420 blueprint. That's designed to help you go from 1 to 20 contracts over a period of 24 months. Your first goal when you start is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Now your goal is to increase your account balance by $2,000. Once you accomplish that, you'll get the green light to add a 2nd contract. The difference between the first contract and the 2nd contract is you're adding the 2nd contract with profit you earned in the market. The blueprint tells you when it's time to add number 3, number 4, number 5, but you only add 1 at a time, and you only add with profit you earned in the market. If the blueprint says it's time to add and you don't have profit available to add an additional contract, you don't want to add, you want to come out of the live account back into your demo and your simulator. You want to book a one-on-one mentoring session with myself, Michael, Valerie, any of us, all of us, so that we can go through the trades with you to help you understand what happened. And then once you get your confidence back, then you go right back to your live account and pick up where you left off. Now, so far this week, last week was week 134. It was a busy week. We had 87 total alerts, 12 never triggered. There were still 1 on the clock when the week ended. So we had 75 actionable alerts, 55, 12, 8 stopped out. Okay, that's 11% of the actionable. An average week is 20%, so that was better than average. Okay, and then that brought us into week 135. Most of Wall Street, or most traders, are waiting for the Monday morning Wall Street open at 9:30 a.m. Eastern. We go to work Sunday night at 6 p.m. Eastern. Globex opens, then Asia opens. Traders in Asia are buying, selling stocks. Futures track that. Then at 3 a.m. Eastern, London opens. Traders in the UK are buying and selling stocks, and the futures track that. Then, of course, Wall Street opens at 9:30 a.m. Eastern. Futures continue to track that right on up until 5 p.m. Eastern this afternoon. The Monday session will end for us this afternoon at 5 p.m. Eastern. There's an hour break, and then tonight at 6 p.m. Eastern, the Tuesday session begins. And that process just repeats itself around the clock every day. And now once the alert channel opens on Sunday night at 6 p.m. Eastern, it stays open the entire week. Alerts could come at 2 a.m., 2 p.m. So we service traders around the world. Doesn't matter where you live, what time zone you're in, you'll have alerts to work with in the channel. The first alert out of the gate last night was the carryover. Actually, this was the carryover from last week, which was stopped out. Then we had some gap fill trades with futures. Because they trade around the clock, we don't see a lot of gaps. Sunday night and sometimes during earnings season, we'll see gaps. But typically, it's just Sunday night. So we had a gap fill on the S&P, on the Dow, on the Russell, and on the NQ. None of those ever triggered. And let me show you. Here's the Globex open right here last night. Now, typically what will happen in the first few hours of the session, price will come down on the indices, S&P, Dow, Russell, NQ. Price will come down and close the gap, and then either continue dropping or find support and begin the move higher. Last night, a little unusual in that we never came back to fill the gap. So those trades remain open. You know, if the thing I talked about earlier unfolds, we get a major reversal and start to head down, then at that point, we will probably see those gaps get filled. And the first S&P trade, we had a gap fill on crude. That one did trigger and made it to its target. Then, let's see, where's the S&P? Because I got that chart up. S&P, okay, the way you read it, this is alert number 6,661. The number here in parentheses, that's where price was when Valerie came through to do the recap. That was the swing higher, swing low at that time. It may have continued on further. It's just a point of reference for us. So alert number 6,661, S&P 500 E-mini. The idea was to be long 38.32, initial target 38.34, potential resistance 38.45 or target number 2, potential resistance or target number 3, 38.54, and then the final trade to target was the weekly trading zone above 38.68/69. Every alert has a final trade to target. If it's a long or a buy, then the final target is the weekly zone overhead. If it's a short or you're selling the market, and it's the weekly trading zone below. On the shorts, instead of potential resistance, it'll say potential support, potential support. So it's the initial target, target number 2, target number 3, target number 4, final target. Okay, so let's see how that played out on the chart. The entry was 38.32. That's about right. 38.32. Entry 38.32. Okay. So we'll stick that right there so you know where it is. Now, important prices, important areas are almost always tested. And sure enough, price did try to come back and test the trigger, but the swing low was 34.5. So we didn't quite get back to the trigger this time. When the price pulls back to the BBC, we expect that to be good support, and it was. Now the initial target was 38.34. There's always a 2-point initial target. For those who are looking to just get their goal for the day, whether it's 2 points in the S&P, that's $100, or 10 ticks in crude, or 10 ticks in gold, or 20 points in the Dow, that's initial target, $100 per contract traded. So 38.34 right there. Okay, that's what 2 points looks like in the S&P, based on how I've got my. So that's initial target. Okay, and then the second target was 38.45. And there it was right there. Okay. Second target, 38.45. Now remember, important prices, important areas are almost always tested. Just as the entry is an important area, the targets are important prices, important areas. So we hit that second target. We pulled back to the BBC. Okay. Now we still didn't get below that entry, but we did pull back to the initial target. Came very close, I think 2 ticks. So we got a leg and a retracement, a leg and a retracement, and then this big beautiful leg right here. And again, these are last week's weekly zones. So the third target was 38.54. $38.54. $38.54. Everything we teach, everything we do is fluid across all markets, all time frames. Price flows on a daily chart the same way it flows on a 1-minute chart or a 30-minute chart or a volume chart or a range chart. Price flows the same as it does on the S&P, as crude, as gold, as Russell, you name it. If it's an auction style market, which means there's buyers on the bid, sellers on the ask, and price channeling back and forth, the flow is the same from support to resistance, back to support, back to resistance, back to support. It's a never-ending cycle, okay? The weekly trading zones, you should think of those as fixed support and resistance. The indicators provide you with dynamic support and resistance. Now, there was the third target. The final trade to target was last week's weekly trading zone, because that was the zone overhead. Final target, 38.68. So if we do, I don't do public math anymore because I always get it wrong. So I'll use my calculator. 38.68 minus the entry at 38.32. Thank you, iPhone. That's 36 S&P points. From the entry to the final trade to target, 36 points at $50 a point. That's what the S&P pays. It's $1,800 per contract traded. If you've earned the right to trade 2 contracts, then it would be $3,600. If you've earned the right to trade 10 contracts, well, you can figure out, you can do the math. It would be $1,800 times your 10 contracts. But price kept going. And so this morning, after the open, I don't put any alerts out during the first 30 minutes of Wall Street. Now, that's just a personal preference. I'm not saying you should or you shouldn't. Michael hits the ground running. Valerie hits the ground running right at the opening bell. I prefer to wait 30 minutes and let the market settle down a bit. And you'll decide whatever is best for you. And this morning, the first alert in the S&P, in the alert channel, was to be long 38.88. With an initial target at 38.90, and then a final trade to target would be this week's weekly trading zone, because the weekly trading zones came out this morning at 6:15 a.m. Eastern. So the weekly zone that we hit was 38.92. So it was the entry 38.88, initial target 38.90, final trade to target, weekly trading zone 38.92. Final target 38.92 / 38.93. That's the new weekly trading zone. And remember, we only have one more current weekly trading zone left overhead. And so from the entry at 38 to 38.92, 4 S&P points at $50 a point, $200 per contract traded, and price just might, okay. Now, when price starts to walk sideways, see, on this move up, notice how the step line is on the left side of balloon climbing. As this move starts to run out of steam, price will start to walk sideways. The step line will cross from the left side to the right side of blue and climbing. On a long move, once the step line crosses over, we're looking for the first red candle that closes below the step line. That's what we call the exit signal, okay? Now, that's on an extended move. This move hasn't traveled far enough from this entry to warrant an exit signal, okay? So we are still, because it's early in the week, the swing highs that we've put in here, 38.99.5, that's important resistance overhead. Whether we dip back below the trigger or not, it looks like we might. Once we dip back below that trigger, we may trigger a second time. And so then our resistance overhead will be this swing high at 99.5, then last week's zone at 39.06, 39.26, 39.50, 39.90, and then our highest weekly zone this week is way up at 4,005/06. As the week progresses, you see the new zones really start to take hold and hold sway over the market. And the previous, now every now and then we run across a zone that stays important for many weeks. In fact, last week I had a zone on my chart that had been on my chart for, it was in yellow for probably 5 weeks, because price just kept coming back to it and coming back to it. It would be support one day and resistance the next day. See how price is working to dip below that trigger, okay? It might come down, even find support here at last week's zone, 84/85, and then launch to the next leg to the upside. I don't think we're done on the upside yet today. Now let's real quick jump back to our daily chart. Okay. Now remember the numbers that we talked about. Overhead, we of course have today's high at 99.5, and then this 38% fib extension is 39.05. And last week we had a zone at 39.0607. So if we dip below the trigger here and start another run, then our initial target would be roughly, well, would have a 2-point initial target, then potential resistance, 38.98. And then the number that we just pulled off of that daily, $39.05, then the final, well, it wouldn't be the final trade 2 target, because the final trade 2 target at this point will be the weekly zone overhead, which is way up there, okay? So see how we're coming back? That's what, when you hear me say important prices, important areas are almost always tested, this is what that means. On this first 30-minute candle, we went from 38 to 92, 4 points. Then we got back below the trigger on this candle, triggered again, and went from 38 up to why don't I type that in right? That would be better. The entry was 38.88. There, that looks better. So the initial trigger took us up to the final target at 92, 4 points. Then we got back below the trigger, and from 88 we traveled up to 99. That's 11 points. So we had a 4-point move. The second trigger gave us an 11-point move, and now if we trigger a third time, we'll see what that brings. Okay, if as price drops, if this old weekly zone doesn't hold, then we've got the BBC here at last week's zone, 38.68. So we'll look for potential support here And if that doesn't hold, potential support here. Now remember, we've got a this week zone at 92/93. And the this week zone below that is back down here at 46. Okay. So all of our members, first thing Monday morning when the zones come out, get the zones on your chart, but hang on to the previous week zones. Okay. Now, you don't want to get too many lines on your chart. It gets cluttered. It's hard to see things. You can color code the important ones, or you can just keep a little notepad beside your keyboard, the way I do. And probably by tomorrow, I'll start putting the new zones on, and the old zones from last week that are still important, I'll highlight those in yellow. Now, this move, let's say that support doesn't hold here. If price continues to drop, then we will expect that it's going to try to get to the BBC, where we expect it to find good support. Just like it did here and here, we would expect that again. So I know that some traders would look at this and go, well, aren't you going to take advantage of this opportunity here for price to drop to the BBC? And the answer is no. That would be a counter trend trade based on a 30-minute chart and our strategy. There's nothing wrong with counter trend trades. Some people specialize in those. Some people are contrarian by nature and they prefer the counter trend trade. Issued so far in the Logic 247 channel, we've issued 6,668 individual alerts. 6,668. Every one of those has been a trend trade as defined on a 30-minute chart. If price is above the BBC, I only put out long alerts. If price is below the BBC, I only put out short alerts. So all 6,668 alerts, whether they're long or short, are trend trades. So again, there's nothing wrong with taking a counter trend trade as long as you understand that it is counter trend. And in my own personal experience, I don't feel that counter trend trades have the same degree of high probability that a trend trade offers, which is why I chose to only put trend trades in the alert channel. Now, as you learn a methodology and a strategy, and you become comfortable putting on and taking off trades, if you choose, once you know how to spot a window of opportunity, okay? I mean, a window of opportunity for counter trend, although I won't put this in the channel because it's counter trend, 38.79 down to 38.74. Nice 5-point window of opportunity. But again, I feel that the trend trade offers our new traders who are trying to learn how to trade a higher degree of probability than the counter trend trade. That's the reason. Okay. So since last night at 6 p.m. Eastern, we've had a short on gold, stop out on crude oil. This was a long on the NQ, long on the Russell, no trigger on the Dow, long on the S&P, long on the Dow. Now, this is where we hit midnight. I'm on Mountain Standard Time till the 14th of the month. And because Arizona doesn't do daylight savings time, on the 14th, I will then be on Pacific time for 8 months. So right now I'm still on Mountain Standard. Telegram reads the clock on your computer. So when you see my Telegram channel, you'll see Mountain Standard Time. When you look at your Telegram channel, you'll see whatever time zone you're in. So these are the ones that came out this morning so far. And then these are the ones from night. Long on the Dow, long on the S&P, long on silver, long on crude, long on the NQ, long on the Russell, gap fill short on crude. And then there's a gap fill on the NQ that hasn't triggered yet. It's still valid. Gap fill short on the Russell, gap fill short on the Dow, gap fill short on the S&P. And then the one carryover we had from last week, that one was a short on crude, and that one stopped out. It's week 135. Now we have a second type of alert. It's a little bit different. You see, the logic alerts that we just looked at, those are based on current price action. Our concierge trade alerts are based on historic price action. Now, the logic alerts come out around the clock, 24/7, but the concierge alerts are only posted once per session, shortly after the Globex open. So last night, I got them out at 6:35 p.m. Eastern, 35 minutes after the markets opened. And you'll notice there's two numbers for each market. The best way to handle these, and now these numbers are good for the entire session. This is forward guidance for the entire session based on historic price action. So what I recommend is that you put two lines in the sand, okay? So the S&P, you put that line in the sand at 38.34, which would be basically right there. CTA. So once price goes above that line in the sand, we're only looking for long trades based on the alerts, based on the 30-minute chart. The other number was 37.97. That number, that line in the sand, be down here. 37.97. Okay, so once the report is published and you go put your lines in the sand, if price starts moving up towards 38.34, that's bullish, okay? And then above 38.34, you know we'll only be looking for long alerts for the logic channel. If price starts to drift down to 37.97, that's bearish. And so as price approaches 37.97 and gets below it, we're only looking for short alert trades, okay? So last night, the CTA number on the long side for the S&P was 38.34. Our initial logic 247 alert was to be long 38.32. Initial target, second target, third target, final target. And then we had an alert this morning, 38.88. The final target at 38.92, because that's a new weekly trading zone. And the first move was good for 4 points, and then the second trigger was good for 11. Okay, so that's just about everything I can tell you about the S&P. So now we'll go to the Dow. And I'm not going to dive deep on each and every one the way I did on the S&P, but I'm going to give you those CTA numbers. So you'll have forward guidance for the entire session. 31,230 was the long side for the Dow. CTA long 31,230. So that initial pop took us up to 71. So that's 40 points, $5 a point, $200 per contract traded. Important prices, important areas, almost always tested. So we had one trigger, two triggers, 3 triggers, 4 triggers, and price attempting to pull back to the BBC. The short number was down at 37.85. Probably won't see that in this session. The Globex open last night was right here on this candle. Okay. Okay, next on the list is the Russell. And there's the Globex open right there. Long side for the Russell was 2240. The CTA forward guidance for the entire session. Once price gets above 2240, we're just looking for longs. This first little poke above it took us up to 42. So there's 2 points if that's what you're looking for. Russell pays $50 a point. And back below the trigger, this time from 2240, we go up 14 points to 2254. And we get back below the trigger, and it takes us all the way up to where we are now at 2272. So it's about a 30-point move, $50 a point, $1,500 per contract traded. Short side was down at 2180, and doesn't look like we're going to touch that in this session. Okay, next on my list is crude, and we are in the J contract now. Now, we had an alert that got stopped out, but that's just the truth about trading. Even though the market did what we thought it would do and more and then some, in logic, it got stopped out before it got to the target. Okay. 9 out of 10 new traders will exhaust all of their time and money trying to find a way to never get stopped out. Professional traders understand that getting stopped out is as much a part of trading as breathing is a part of life. So they don't waste time or energy trying to find something that doesn't exist. They just deal with it with grace. The way you see Michael do in the mornings when he gets stopped out in the live training room. His demeanor doesn't change. He doesn't get angry. You don't hear him throwing stuff because he knows it's a part of trading. And so he just looks for the next opportunity. And that's what you have to learn to do. So last night on crude, the CTA number was 6270. Now the Globex open last night was this candle here. There's the gap, okay? And so the long side was 6270. And the swing high was 6292. So that's $220 per contract traded. The short side was 6130. Okay, so the first move down took us to last week's zone at 6115/20. So that's 10 ticks, $10 per tick, $100 per contract traded. We get back above the trigger, down we go again. This time we go from 6130 to 6030. A $1 move in crude is worth $1,000 per contract traded. So this move has exceeded $1,000. It'd be $1,200 down to 6010. Okay, so we're bouncing off last week's zone. No, that was we had a zone last week at 60. Actually, it was 6015/6020. Okay, so we bounced off that zone. Nope, that's this week's zone. Hang on, I think I had it right the first time. Yep, I had it right the first time. Last week's zone was 6010. this week's zone, 60.15/20. So it's an area. Important prices, important areas, almost always tested. Okay, next after crude on my list is the NQ. Okay, now when I draw trend lines, sometimes I just leave them on, especially when price moves away, just to see what will happen when price gets back to them. Now, let's see if we can find where I originally drew that trend line. Yeah, it may not take me back far enough. Yes, I got. Oh, maybe this is where it started. And we broke out to the upside. This was way back in February 3rd. And then here we are. Nope, that didn't bring us back to that line. So anyway, if you do that, if you draw some trend lines and you just kind of forget about them, that's if you've extended them. See, when you put on a trend line, you can make it array. You can make it finite, which means it has a beginning and an end. Infinite means it has no beginning and no end. It just runs in both directions forever. But to do what I'm talking about doing, if you make it array, it just goes in one direction and price will move away from it. And then weeks, months, I'll never forget the first time I ran across a trend line that I had drawn like months before. Price came down, touched it to the tick, and bounced off of it like crazy. And I'm like, well, that's got to be a whale of a coincidence. So I started watching for that kind of stuff, and there's geometry and stuff in these markets that my humble brain does not fully encompass. Just because I don't know how an internal combustion engine works does not mean I can't get in my car and drive to the store and come back home safely, hopefully, right? So there's many things about the market I don't understand, but I've seen them happen so many times, and I've tested them, studied them, and recorded them, and monitored them. And so for me, it simply becomes a market truth, okay? So anytime I tell you something like important prices, important areas are almost always tested, don't just take my word for it. Do your own due diligence. You watch it, you test it. Let it become the same kind of truth for you that it is for me, okay? That will serve you well. No matter what anybody says about the business of trading, if it sounds reasonable, sounds like it could be, check it out, study it. Of course, you can, back test a lot of things, but really the best study is a forward walk, as they call it. In other words, yeah, you can look and see how it's behaved in the past, but starting this day, write it in your journal. I'm watching for this, or this going forward. And over a period of weeks, months, however long, you'll start to accept that as a market truth. It will literally be written on the tablet of your heart, and you will say it with as much authority as I say important prices, important areas are almost always tested, because I really do know that. I don't just believe it because somebody said it. I know it because I've watched it happen over and over and over, more times than I can count. And out of the 6,600 and whatever many number of alerts I said we've posted in the alert channel, most of those triggered multiple times. Once an alert triggers, there's a greater probability of it triggering again than not triggering again. Okay, so last night's CTA number for the NQ was 13012. One, get up there. Wow, really struggling here, aren't I? Let's try that again. 13-0. 13-012. You can do it. There. Thank you. All right. So from 13.012, we ran right up to last week's weekly trading zone at 82. That's about 60 points. $20 a point, about $1,200 per contract trading. And then price finally got through the zone, pull back to the BVC, which we expect to be good support until proven otherwise. And then we rally and we hit that trend line that I just drew this last week. I connected these bottoms. And if you don't know how to do this, like I got 1, 2, 3, 4 touching points. So if I highlight that, and on my keyboard, just go Control C, and then click my cursor up here and go Control V. It drops me a trend line at the exact same angle. Don't ever grab it from the end because you'll change the angle. And now if I double click this, go to finite, and I click ray, see how it shoots it off into the future at that exact same angle. Now just make sure that when you grab it to pull it into place, you grab it from the middle, not the ends, because you don't want it to change the angle. So that's how I took this and created that. And now the one down here, I can double click that, and I could also make it array. So price has been bumping up against, we had 1, 2, 3, 4 touches on the bottom. And then up here, we've had 1, and then we spiked above it, touched the zone, got back inside, back to the top, pull back to the top, pull back to the top. And most technical analysis 101 books, it will tell you that when you have a price channel, which is what this is, once price gets back to the middle of the channel, it becomes a 50-50 coin flip kind of thing as to whether or not price is going to return to the top or continue on to the bottom. So like right here, if price were to drop to the BVC, we expect that to be good support. And if we knew it was good support because it started to print a green candle after it came down and touched it, then we would look for a long position with a target. You know, we'd have an initial target and then maybe a second, and then right up here, top of the channel. Okay. Now we could just break out of the top of the channel here and not pull back to the BBC. If we do break out of the channel, what you like to see is for price to break out, pull away. See how none of these ever pulled away? They're all touching it. You'd like to see it pull away, maybe a candle open and close, and then a retracement that comes back to find support at the top of the channel. And then as you start to print green candles to the upside, then we'll be trading that long up to the weekly zone overhead. Okay. And so Next on the list, gold. All right, last night's CTA number on gold was to be long, 1751. And we put in the swing high at 57.40. So that's $640 per contract traded. If you got out at the exact swing high, which is very difficult to do, because you don't know it's a swing high or swing low till after the fact. But why would we expect that to potentially be good resistance? What was once support very often becomes good resistance. You'll see that repeated over and over and over, and you'll read that in most technical analysis 101 books. Okay, so if you're long here, as price started to approach this area, you'd be careful, you'd be tightening up your stop. You might choose to just go ahead and take profit, because again, the trigger was 51. And so by the time you hit 57, that's $600 per contract traded. You could just choose to take your profit, okay? You don't have to prove anything to anybody. This is your trading business. This is between you and the markets. The short side on gold. What? Am I reading this right? Looks like the winner of the World Bets competition was something called NIMIQ, N-I-M-I-Q. I don't even remember seeing any votes for that. I can't even believe I'm reading this. Just popped up on my screen. Huh. Well, I'll have to do some research on that. I never even saw that symbol in the channel, which tells me it may have been a rigged contest. Oh well. Things happen. We'll see what happens next. They're certainly going to lose their credibility on the world stage if that post I just saw was real. Because the top three contenders were G999, followed by PWC, followed by EFIN. So, okay. The short side for gold last night, CTA, was, let me get back to that page. There we go. Short side for gold was 1722, which looks like we just got there. $17.22, we dropped, I'm gonna call it $17.19. It's $300 per contract traded and change. And then just one more, silver. Okay, long side was 27.05. The exposure that G999 got from the contest, whether we were announced, the winner or not, was worth every vote that was placed. So 27.05 made it up 27.07. 2 pennies is $100. Back below the trigger, off we go again, up to 27.17. The short side is 26.37, and we haven't been there yet. Okay, that does it. Now, once again, quick recap. So far this week in Logic 247, We are in week 135. 18 alerts issued, still waiting on 5, 13 actionable, 2 stopped out based on not risking more than $300 per contract per trade based on market structure, and a simple 3-step process that we teach all of our traders. If you want to become a part of the CFRN family, become a passport holder, have access to all the alerts, all the training, 2 hours every day, every trading day, everything we offer today and tomorrow. We have no upsells. We don't have anything else to sell you. Passport gives you access to everything. It's the all access pass, $5,000, $49.97 to be exact. Lifetime membership, pay once, enjoy the benefits for life. To become a passport holder, go to eminifuturestrading.com, click the button. Once you become a passport holder, Valerie will swing into action. She'll send you everything you need. All the links, the passwords, the Telegram channel invites, charting platform, indicators. She'll get you all squared away, okay? And once you go there and become a passport holder, you can then, if you want, call 949-42-EMINI and say, hey, Valerie, I just got my passport. I'm ready to go to the next step. Or you can send her an email, support@cfrn.net. And of course, if you have any questions about anything, you can always call that number, 949-423-6464, or email support@cfrn.net. And the quickest way to get a response is Telegram. One of us is always monitoring the Telegram channels. So we have a in Telegram, if you search CFRN support, they have a support channel. Our discussion group runs 24/7, 365. So trading can be a lonely business. You never have to trade alone again. You can become a part of a very vibrant community where people care about one another, support one another, take care of one another. It's really unlike anything you've encountered on the internet in regards to trading. We've worked very hard since 2005 to make things as simple as we possibly can. All of the complicated, convoluted, expensive trading stuff out there. Well, you guys, if you were here last Thursday, you heard Dr. Tom talk about his experience when he was a broker on Wall Street. He personally said he spent $250,000 or more on quote unquote trading stuff. Everything from indicators to seminars to classes to you name it, he bought it. And he said that he finds our very simple approach more beneficial than any of the stuff that he spent all that big money for. So, of course, you be the judge. Time now for our good word for the day. We spoke last week on, I forget what our topic was on Friday. So we'll just jump to today's topic. Trust God and don't be afraid. And this message is for somebody. Isaiah 41:10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you. I will help you. I will uphold you with my righteous right hand. Fear will rob you of your creativity and self-worth. It is the enemy of greatness, the antithesis of faith. The longer it lives inside you, the stronger it grows. And it's fertilized by words. Not just the words others say, but the words you say to yourself. When you tell yourself, there's no way I'm going to make it, you've dented your armor and undermined your effectiveness. And if you let it fester, it will affect you like a plague. A wise man once said, there's nothing to fear but fear itself. When you're fearful of something, though, it's maybe hard to accept that. And with your own power and your own strength, your own might, it might be an unwinnable battle. But remember, the whole part of accepting Christ and recognizing that He is God and we are not, and learning to lean on His strength versus our own, that's the only way to truly deal with fear. To overcome fear, you must first identify and expose it. Hide in your motives. It will drape itself in overprotectiveness, anger, pettiness, jealousy, and boasting, so you don't get overlooked. It'll weigh you down with the responsibility of feeling like you have to look out for yourself, protect yourself, and defend yourself. So when you're fearful, what should you do? There's only one guaranteed course of action. Stand up to your fears, within and without. There's a promise from God's word that's as true today as it was when He first spoke it. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you. Yes, I will help you. I will uphold you with my righteous right hand. That's a promise from the Word of God. In Scripture, the term God's right hand speaks of His willingness and power to work on your behalf. 2 chapters later in Isaiah, God told the same people, this is Isaiah 43:1, fear not, for I have redeemed you. I have called you by your name. You are mine. And what God owns, He takes care of. So make sure you belong to God. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.